So Bitcoin touched 79K over the weekend, right before selling off to 76K earlier today. The price action tells you all the story ahead. There's a lot of uncertainty, especially with the 4 huge macro events this week. We have Kevin Warsh's official confirmation that is getting voted on Thursday. We have the Clarity Act officially getting delayed until mid-May for its final deadline. We have the FOMC event coming up on April 29th. We have earnings week for 4 of the Mag 7s, all dropping their earnings this week. And we have still the same uncertainty with Iran and Trump. So they said that they were going to carry out peace talks on Saturday, but they didn't reach anything yet again. So all of these combine together to form a major uncertainty event driven week. And just today as well, the Bitcoin 2026 conference is kicking off, and we have both the SEC chair Paul Atkins and the CFTC chair Selig speaking at the conference. So we will their speech is just about to wrap up, so we will do this segment towards the very end where we will summarize what they have covered. Okay, let's get right into it. If you have any questions, please leave them down in the chat and we will do a Q&A at the very end. So first, let's cover the Bitcoin price action straight on. I have been warning people about Bitcoin's danger ahead. When Bitcoin was at 78K, I told people, hey, if you haven't been buying, if you haven't been DCAing in the 60K's range, well, 78K is no longer cheap. And a lot of headwinds could blow against the Bitcoin price momentum and bring it back down. And we are starting to see some of that. I don't think the daily uptrend has been broken yet. However, Bitcoin needs to survive this week and not show a at least daily lower low in order to keep the short-term momentum going. What does that look like? Well, even for a very short-term daily time frame, okay, if you want to see this rally continue above the 80K mark, we have to hold above essentially right here, 74K. That is this resistance and this resistance from March 4th and March 17th. And that's also the last higher low here made in 1 week ago on April 20th. This isn't anything spectacular of a long-term reversal, started a new bull market, so to speak. No, none of that is happening anytime soon, okay? We still have the 200-day simple moving average at 84.8K, which is also the next major resistance up here that led to the eventual breakdown back in December, and then this breakdown below in January of 2026, earlier this year. So that resistance, we are not even there yet. And even if we get there, the bull market does not get confirmed until we get above the 50-week simple moving average, which is at 95.6K now. It's coming back down, that moving average, because we're in a bear market, so the moving average will trend down. However, we are not there yet. We are at 76.8 until we get above 95.6. This is not the bull market. We are still in bear market. What we are talking about here is just the short term, okay? Can the momentum continue? Because we have had a bit of a rally since March 29th. So coming up to about 1 whole month of green. Can this monthly momentum sustain? The answer is we need to hold above 74K. Very simple. So 74K is not only the daily uptrend level here, the last higher low, and the resistance from March, and also when you look at the weekly time frame. For the weekly close, there is also resistance right at 74K. And this week marks the first week that could be a bearish week after the last 4 have all been bullish. You see right here, 1, 2, 3, 4 bullish weeks. Now this is a red week. Let's see where this week closes. We don't want it to close below 74. Why? Because that's this resistance right here. I'm gonna draw it as this resistance right there, and we have the last bullish candle on the weekly that started the week at 73.7K. So if this week closes below 73.7, that will be a bearish engulfing candle. So we don't want that to happen on the weekly candle close basis, which also matches the daily higher low right here. So very simple. The charts all match up. The support we need to hold above is roughly 74K. If you want to be exact, 73.8. Okay? As long as we hold above 73.8, the daily trend is still up. Even though we don't have a weekly uptrend yet. We don't have confirmed bull market yet. So let's say if we hold above 73.8, we could continue all the way until something like 84K as a very strong resistance before rejecting back down. So that's my read on Bitcoin TA at the moment. Okay, now let's get into some of the macro factors that could bring Bitcoin down, which is what I see. Okay, I don't see this as a reversal to the bull market. I still see lows coming towards later stages of the year, at least in the low 60Ks, if not below 60K into the 50Ks range, to test the 200-week simple moving average, which is right now at 60.5K. I still think this is happening sometime later this year down here. Now, why do I think that? Well, a lot of uncertainty even happening in the short term. Look at Brent crude yet again. Oil price is above 100 yet again. There is no resolution coming from Iran. Let's just quickly go into the one headline that came out over the weekend for the Iran situation. And that is on Saturday, both sides were supposed to speak and come to a deal, but they did not have a deal. And the gist of it now is that Iran tabled a Hormuz reopening proposal, which has a 3-phase arrangement. And the White House Situation Room did not want to approve of it and agree with it Saturday, but today they are meeting to review the offer in the White House. We could see something coming out later today, if not early tomorrow, with Trump saying something positive. Because remember, what does Trump say? Trump has the taco trade fully in place now. Whenever he says something negative, the next news is positive, and then the next is negative, the next is positive. So because Saturday we had a negative reaction, likely we will get something positive from the Situation Room today. This is just my read of it. Even though the public news says, and I quote from Secretary Rubio, he called the proposal unacceptable. Okay, and then Trump said, we have all the cards, no deal is imminent. But that probably means they want to release some sort of positive news soon coming from the Situation Room today. Okay, so Iran has already offered a deal. Now it's up to the White House to respond today. And Iran, in their deal, has said that they want the Strait of Hormuz reopening tied to an end to the war. But let's see what Trump responds with after their meeting today, after their discussion in the White House to review the offer today. Okay, next, I wanted to cover something specific to crypto that I don't see a lot of people mentioning because everything is centered around Iran and US right now. But something very big is coming out of the EU and their ban on Russia. So the 20th sanctions package targeting Russia and Belarus is about to come out, or has it already come out? I believe it's coming out today, if I'm not mistaken. Let me see. Yes, this was already adopted. It was adopted April 23rd, and it takes into effect on May 24th. And this is the first time that the EU has banned out of their sanction packages something related to crypto. So this sanction targets energy revenues, trade, military industries, and crypto service providers. Specifically, if you look at the chain analysis reporting of this, the EU's 20th Russia sanction package introduces a total sectoral ban on Russia-based crypto service providers and decentralized platforms, marking the most crypto-specific enforcement action in the bloc's history. So what is getting blocked here? First, it's the RubX stablecoin and the digital ruble CBDC, so the central bank digital currency of Russia, is getting banned. This will explicitly begin on May 24th. Let's see. So this has billions, no, actually tens of billions in cross-border volume that currently runs through Russia's state-backed ruble-pegged stablecoin. And all Russian CASP interactions, which include routing through exchanges in Kyrgyzstan, in Central Asia, and in the UAE. So all of the volume routing the Russia CBDC, official CBDC, will be banned. This is coming from the EU side. So currently, there is a 27-day window between the adoption, which was April 23rd, until May 24th, that any EU-touched counterparty could unwind their exposure to this CBDC. This is actually pretty big because this isn't just like some crypto platform getting banned. It's Russia's official CBDC getting banned and sanctioned as a big part of a move that's a geopolitical move that comes from the big conflict, right, between EU and Russia. So very interesting. Let's see if there's anything else that gets touched. No longer a warning shot, it is a structural prohibition on the entire Russian crypto services ecosystem, and compliance teams globally need to treat it accordingly for EU nationals wherever they are. Yeah, so it is a hard compliance deadline now. If you are in the EU or in that general region, you deal with Central European or East European, crypto exchanges, payment providers. for crypto companies, you use crypto, you got to watch out, because it really looks like any entities, not even just like, shady entities, but the official CBDC coming out of Russia is getting banned, cannot use it for EU participants. This is actually very big. It's not some like random news that may or may not happen, sentiment. No, this is real regulation coming from a sector, a geopolitical region that we don't usually watch, which is EU versus Russia. Okay. Taking a step back, let's look at the US macro week ahead again. So last Friday, we covered how there are 4 major catalysts this week, and the most important one being the Kevin Warsh confirmation. So Kevin Warsh, not this guy, Kevin Warsh is the upcoming new Fed chair to replace Jerome Powell. And he was supposed to replace Powell starting from May 15th, although last week he was blocked because Senator Thom Tillis says that they need to end their probe into Jerome Powell in order for him to fully back Kevin Warsh and confirm him as the next Fed chair. Well, just yesterday, Senator Thom Tillis officially gave a statement saying that he's ready to proceed with Kevin Warsh's confirmation. He has expressed confidence in Warsh's capabilities as the Fed chair. So this directly shifted the market odds that we can get Kevin Warsh as the new Fed chair starting May 15th. This is very important for risk on assets for the entire market, for positive market sentiment. Why? Because we need Fed rate cuts, and the Fed is trapped as hard as they can be right now with the Iran situation, with oil price not coming down very easily, with inflation still being very high. And most market participants agree that the Fed cannot cut rates very easily. One rate cut at best until the end of the year. Now, a lot of this could change if the new Fed chair makes a big pivot, okay? But we need him to make many statements to warm up the market going into it. And my read on it is Kevin Warsh could use the August Jackson Hole event to really frame his larger plan for the Fed's decisions going into the next year. But in order to do that, he needs to take the helm at the Fed first. So the block is finished now. So later this week on Thursday, on April 30th, is it Thursday or Wednesday? Wednesday. So on April 30th, Wednesday, the banking committee at the Senate will be voting on Kevin Warsh's Fed chair nomination again to officially confirm him as the next Fed chair. Most people think that he will be cleared this week, but we will get the final confirmation this week officially, if nothing else blocks it. So Kevin Warsh's relevance for crypto is very significant from 2 ways. Number one, his public statements are considerably more open to crypto than Powell. Powell basically never mentions crypto, digital assets, whereas Kevin Warsh has given a lot of statements on, his direction on stablecoin policy, custody, and even CBDC, although nobody wants to do CBDCs anymore. And we really need him to start his process, transitioning into the Fed chair and potentially tell us, hey, is he willing to pivot the Fed policy for more rate cuts towards the end of the year? And will he continue to implement the reserve management purchase program, which is the current QE program. The current QE program is very slow. Will he at least keep that going, and will he speed it up? Because if the QE program can be sped up, that's extremely positive for altcoins. Very important. Okay, so watch out for the first stage of this that could confirm him as the Fed chair on April 30th, so 3 days from now. So related to this is that the Senate, okay, they only talk about one thing at a time. So since the Senate will be talking about Kevin Warsh and his confirmation this week, a lot of people are saying, hey, look, this means they cannot talk about the Clarity Act this week. So Senate delays the Clarity Act to May as their discussion point. And the main authority that keeps following up with the developments in DC, in the Senate, with regards to the Clarity Act is Eleanor Terrett. She has very good insights on the timeline of this. So on Friday, when we made the live stream, they could have scheduled a Clarity Act markup for this week. However, it's already late Monday now, and they still haven't scheduled anything. So they could still do it, but unlikely. So read this. Thursday, the Senate will head into a week-long recess on Thursday. So from now until Thursday, they have to put the Clarity Act into their discussions for markup this week, which is the final thing we need, okay? But they just keep delaying it. So far, it doesn't look like they will do it. And according to Eleanor, this most likely points to the April discussion of the Clarity Act off the table, which means we are likely to extend it to the second week of May, which is basically the final deadline, according to Senator Moreno. Most of the major endorsers of the Clarity Act in the Senate. So it's even tighter now. It really is crunch time. We could get it maybe as a huge surprise this week to get the Clarity Act marked up in the Senate, but most likely we won't get it. And if we don't get it, then that markup will likely be extended towards the week of May 15th until May 22nd, which is the final deadline. Okay, if they don't confirm this in that week, most senators say that, hey, we don't want to talk about it anymore. Let's move on to the midterm elections starting from June. And basically that means we're not going to get the Clarity Act this year. And if it extends to next year, because we have a new Senate, a new House, the Clarity Act doesn't, it will need to go through the House again. It gets drafted again, which means we likely won't get it even next year. So very tight schedule now. We could get it as a surprise this week. If we don't get it this week, then there is maybe 1 to 2 weeks of a period from mid to late May. And that's the final deadline. If we don't get it then, likely the Clarity Act will not come. And that's very bad. So very important thing that we need to get through. Fingers crossed, let's get it ASAP, okay? Because this is the biggest positive news regulatory event, an actual law that could get passed that helps the entire crypto industry, and especially the altcoin industry as a whole. Okay, and that's the Clarity Act. Now, let's talk about the next FOMC. So the next FOMC event is coming up imminently on Tuesday and Wednesday. So Tuesday is the initial meeting, and then Wednesday we have the full statement, full meeting notes, full press conference as well. This will be the final Q&A session of Jerome Powell. Is his last speech, last time that he will be leading the FOMC as the chair. A lot of people expect him to say something crazy, but probably not. This will remain as focused on interest rates and most likely focused on the transitory effects of the elevated oil prices. So the best thing we can expect this week coming out of Jerome Powell's mouth is probably something like inflation being transitory. If he says that, great. That's already very good. That means he's signaling that the FOMC committee can treat the high inflation coming from the Iranian war as short term. Okay, that's the best thing that we can expect. He's not going to cut rates at his very last speech, nor is he going to make some big pivot. Nothing is going to come as a surprise this week. However, we still need to watch this week's event. Why? Because the Fed is really, really, really trapped now. So one major economic indicator came out over the end of last week, and this is the University of Michigan's Consumer Sentiment Index. This was revised up in April, but still, this is the lowest sentiment on record. So despite the slight improvement, it remains the weakest reading on record. And this puts the Fed at an even more trapped spot because we have the economy not doing well. We have, at the same time, inflation still being very high because oil prices are very high. So the one-year inflation expectations is finalized at 4.7% from the same readings. Now, this is going into the core PCE print later this week, coming in on April 30th, which is on Tuesday, Wednesday, Thursday. So a lot of people are expecting the core PCE to, the consensus is 2.6. Yeah, let's bring that up. Core PCE, I believe the consensus just dropped. Nope, hasn't dropped yet. So from the market's expectation, they put core PCE consensus at 2.6. This is what I've read. Although this isn't the official forecast yet. However, if we get a print something like 2.8 or above, this would directly challenge the market's pricing of that even one rate cut by the end of the year. So long story short, this core PCE, whatever the forecast is here, okay, we needed to show promise. And that will be hard. It's the entire month of March, which is the entire month of the hardest period of the Iranian conflict. If we get just slightly higher of the actual reading compared to the forecast, the market is going to price this very poorly. So look at the current pricing of Fed decisions by the end of the year. Fed rate hike in 2026, this just dropped from 28% 1 month ago to now 16%. This week, if we get the core PCE reading just slightly higher, 0.1% higher than whatever the forecast is, the Fed rate hike probabilities will go up again, no doubt. And if the rate hike probability goes up, well, the number of Fed rate cuts probability will also go down. So you see, currently we are already at 40% of no cuts and about 60% chance that we do get some sort of a cut, maybe one, maybe two. If we get the core PCE slightly higher than the expectation, which I think it's actually quite likely because this is the March reading. It should be the worst reading that we have over this past year. Chances are people will say that we're not going to get any rate cuts anymore this year. And you'll start to see some headlines related to that. And the sentiment in the market can completely shift. So the hot PCE print this week, if it comes, will be very bad. Because basically every other indicator is already showing that inflation is quite bad. When it comes to the headline PCE, headline CPI, you look at right here. This is the core PCE, remember, which doesn't take into account the gas prices. If you look at the headline PCE, let's bring that up. PC price index 906. This one, like, nobody has confidence in this already. And in fact, yeah, I think this is the consensus number that people were saying. Headline PCE consensus is 2.6. And a print at or above 2.8 will be bad because the previous one was 2.8. Yeah, this should be the number that the news headline I'm reading here is referencing. If you look at the CPI is already terrible. Here, look at this one. This is the consumer price index. This is the one that reflects the quickest. And because they already took into account the March numbers, at least the forecast was, it pre-forecasted a very high number, 3.4, and the actual number came in at 3.3. So they were already expecting a sharp increase in inflation, and it did come. So from February to March, it went from 2.4 to 3.4. Look at this big tick up. So now we have the headline PCE and the core PCE dropping this week. And the core PCE, remember, it's the core number that the Fed looks at. So even if the CPI is high, technically the Fed can ignore it and just say, hey, like, we don't look at it because the inflation coming from the oil prices rising is transitory. So even if the CPI reacts, that's okay. As long as the core PCE doesn't react, that's okay. But the core PCE number is the number that they use directly to compare with their inflation targets in their projection material, in the PDFs that they put out. So let's see what the forecast here is, and let's see if it's higher than the previous. Any sort of bad reading here will be very bad. Fingers crossed we don't get it. But I'm not hopeful here because the entire month of March, we had a month of war. So my read here is still this next core PC could really spook the market. Let's see. Either we get a very bad forecast and then it just ends up being very bad anyways, or we get a too conservative forecast and the actual number surprises, which will also spook the market. So you got to be prepared for that. I am not holding my breath on a non-event on this core PCE print on April 30th. Okay, and that's going into this entire week. So let's just quickly summarize this entire week. So on April 29th, we have the FOMC meeting decision. 99% chance no rate cut. Powell is not going to say anything meaningful, except that he could say that the inflation coming from the oil crisis is transitory, because the Fed has put out a statement already on their website. If you look at news press releases, they did announce something last week, if I'm not mistaken. There was something here. I can't find it here, but we covered it last week. It was saying that the oil prices induced inflation, it's transitory. So Powell could say that, which would be nice to have, but doesn't really change anything. And then April 30th, we have the core PCE number, big number to watch. We have Kevin Warsh, the Senate hearing to confirm him as the next Fed chair, and he could make a statement as well on, whatever he wants. The big earnings week we covered last Friday about the 4 of the Mag 7s have their earnings this week. Apple, Microsoft, Amazon, and Meta. I believe those are the 4. So this could really drive big movements in the stock market indices. These are happening on Wednesday and Friday. And then if we have Kevin Warsh being confirmed, well, most likely the Clarity Act will not come this week. So if we don't get the Clarity Act this week, then May 15th to May 22nd is the final deadline, final window. Those are all the events happening this week. So all around Wednesday and Thursday, you have to pay attention around those period. And I will do a live stream probably on Wednesday and Thursday to cover both of these timelines. Okay, finally, let's quickly cover what just happened during the Bitcoin 2026 event. So as we were doing the live stream, the SEC Chair Paul Atkins and the CFTC Chair Selig were both giving their fireside chats at the Bitcoin 2026 event in Vegas. So let's see what they actually said. Let me bring up some notes here. Here are some of the live coverage. Here are some of the takeaways. I'm just going to directly read. Okay, let me bring up 3 pieces of summary on X. So, has there been any summaries? Key takeaways from Paul Atkins at the Bitcoin conference. Number 1, the end of regulation by enforcement. Number 2, a new innovation exemption for digital assets. Number 3, a massive shift towards industry collaboration. Okay. Random. So is there a longer summary here? Let's see. What does Atkins actually represent? Is this new? Yes, this is new. April 27th. Oh, no, this is not new. This is AM. Okay, let me just read the direct AI summary because my AI was watching the stream. So Paul Atkins laid out a framework, including Project Crypto modernization, full overhaul of securities rules to enable on-chain trading. This is cool. This is related to not even this one here, but the earlier coverage that we made on Project Crypto. Way back in Project Crypto, not this one. Yeah, this one here. This was Project Crypto. So watch this video. He basically reiterated Project Crypto. And he also says 5 category token taxonomy. Yes, so that's this one here. SEC just gave crypto tokens the green light. He basically explained the 5 categories. So digital securities, digital commodities, digital collectibles, digital tools, and stablecoins. 5 categories as cryptos. Wait, 5 categories is non-securities. No, 4 as non-securities, 1 as a security. There you go. 4 out of 5 categories of crypto types of cryptos are non-security, while the other is just digital securities. Innovation exemption. This is nice. This is how tokenized securities can trade on-chain fully legally. So if we get the Clarity Act, you got to watch tokenized stocks. This will be very nice because it will bring a whole wave of TradFi traders on-chain because they settle 24/7. Right now, it's kind of still operating in a gray area. It's mostly crypto traders that are using these. And if we don't have the full Clarity Act, tokenized stocks could disappear still. But if we do have Clarity Act, then tokenized securities can fully trade on-chain, which would be very nice. It can be a long-term industry. And then there will be something called the Act strategy, which is a formal departure from a decade of enforcement-first policy. Let's see what that is. Act strategy. SEC's Act strategy is advance, clarify, transform. That's what ACT stands for. Okay. So basically to replace the era of regulation by enforcement. So they will not go after any other crypto companies. Instead, they will advance, clarify, transform. Okay, whatever that is. Very bureaucratic way of saying it. Okay. They will have a joint SEC CFTC classification framework. Yeah, what falls into SEC jurisdiction, what falls into CFTC jurisdiction, which basically is it a security, is it a commodity? If it's security, it's SEC. If it's commodity, it's CFTC. The direct quote coming from the conference here, earlier address of Paul Atkins, right here. Yes, that's Atkins. So he says they have pivoted from the old practice of regulation through enforcement, and regulation by ambiguity is over. So yeah, basically just outlining everything we have already covered. Very cool. I guess everyone knows these things are happening now. Before, it was mainly just covered on the SEC's website, but now the SEC chair is actually going to the Bitcoin conference and saying these things. If you guys remember Gary Gensler would have never come to a Bitcoin conference because he actually might get booed off the stage. Okay, really quick, let's look at Selig. Yeah, this is Selig. CFTC chair Selig. What did he say? So he says the headline quote here is that America is now the crypto capital of the world. CFTC chair Mike Selig says America is now the crypto capital of the world. And what else did he say? Oh, he has tweeted some things officially. Interesting. Oh, he really likes talking about prediction markets. Here's a direct quote that he gave on prediction markets. So Selig says prediction markets are derivatives regulated exclusively by the CFTC. Interesting. We are not a merit policeman that picks and chooses which contracts people should or should not be able to trade. Exchanges are free to list or for trading any contract that complies with federal law and regulations. So the CFTC really wants to take over the regulation of prediction markets. Okay. And Bitcoin is classified as a commodity under CFTC jurisdiction in the joint framework. Yeah, obviously, but good to see it clearly laid out. And Here is something he said. Is this new? Let's make sure. No, it is not new. This is something that he has said before. Coverage, live coverage. Did he say anything new? Not really. No, he didn't say anything new today. Other than we have this joint digital asset classification framework with the SEC. The CFTC commits to gold standard for regulation for prediction markets and derivatives. Okay. Prediction markets fall under CFTC jurisdiction regulation exclusively. Bitcoin falls under CFTC exclusively. I guess the digital commodities will fall under CFTC if we get the full Clarity Act. So those 16 different coins, they will go to the CFTC and not the SEC for regulation. Other than that, he didn't say anything new today. Okay, so that's the coverage on Bitcoin 2026 for basically the two coverage that matters coming from the CFTC chair and the SEC chair. Nice. Outro and playbook summary for this week. Bitcoin tested 79K over the weekend, but we broke 77K this morning, and we need to hold above that weekly candle close of 73.8, which is also the higher low on the daily time frame in order to continue the short-term bullish momentum. But even if that happens, that's still not the full reversal to the bull market. The bull market confirmation very far away, above 95K at the moment. So not holding my breath for this to be the full bull market. This week, we have many different macro events to watch. You have to watch the FOMC. You have to watch the confirmation of Kevin Warsh as the next Fed chair and what he will say. Maybe he says that he's ready to pivot. He's ready to do more QE. Let's see. We have 4 of the Mag 7s having their earnings this week, which could drive volatility in the stock market, in the indices. We just had the SEC chair and the CFTC chair both appear at Bitcoin 2026, both highlighting that they're ready to embrace crypto regulation, and all of their things are written into the Clarity Act already. But the Clarity Act is not going to the Senate this week. The final deadline is between May 15th and the end of May. So you have to watch that window. If that window gets passed and Clarity Act is still not approved, then it could be very bad. The whole Clarity Act could be scraped, which would be terrible for altcoins, which would cause a short-term sell-off in altcoins. Very likely for that to happen if it doesn't get approved in May. And then the final news to watch this week is the core PCE number and the Q1 GDP growth number, which both come out on April 30th. That's going to drive prediction market and overall market sentiment into the next FOMC in June. So if this core PCE stays the same as the last one, very nice. That means we could get rate cuts this year. But if the core PCE rises, which means inflation rises, and the Fed is even more trapped, that's my read on this as well, then chances are the odds of a rate cut will decrease, the odds of a rate hike will increase, and Kevin Warsh has even less likelihood to make a pivot. So the market will react negatively to this after this week's core PCE. So make sure you watch that number. And that's why this week, nothing is set in stone yet. A lot of uncertainty. You need to make sure you watch each of these events. Okay, if you want our live coverage of these, make sure you subscribe to the channel. I will go live later on this week to cover all of these timeline events as they happen. And follow me on X at VirtualBacon, as we will also drop updates on these in text format, in highlights on my X right after they come out. Okay, that's it. Thank you for watching this video and joining this live stream. I will see you on the next live and the next video. Bye-bye.